Good morning, guys. Hope you're doing well. So we've got some PCE data today, so that's something to be eyed, and that's going to be moving the dollar. But Goldman Sachs was saying that we should be looking at the jobs data, and obviously that's probably got more of a sensitivity in terms of Fed policy, and the Fed are going to be more interested in the jobs as opposed to the PCE data. But it's still going to be an important day, and it's probably going to be moving the dollar, like I say. So the herd are very short. There's 17 people short in indices versus the one person buy, and they've added over the last 24 hours, which is absolutely bonkers. Okay, so they're not giving up. They're adding to their bias, which is crazy. Inevitably, indices are going to have to take a breather. You know, they took a bit of a breather yesterday, but if they're going to sell it, then they're probably going to get punished because the price is going to come up to take their stops, okay? And you could probably argue it's going to come up anyway. Technicals have fallen, so that's of note. We were at 80, then we came down to 60-ish, and now we're 52. So we are falling on the technicals. And remember that the approach to the QDB plan of attack is to wait for this to get nice and low, and then we're looking to buy the dip. But I'd be really careful right now because we're at the extremes, incredibly skewed on the indices. Okay, VIX finally stopped its free fall, and it seems to have found support at 12-13 area, which is well overdue. We were at 20 about 2 weeks ago, maybe even 10 days ago, and we've come down to like 12, which is bonkers. So we are difference from last week is GU is a notable mover. They've sold it, and dollar Swiss, they've also sold it as well over the 24 hours, over the last week, shall I say. So they're still long, but they're less long. Okay, so that's the difference across time. They're very skewed in dollar Swiss, which is a bit weird, so be careful there. Our robot has got dollar Swiss trades because of the bubble deviation. So far so good, and we'd had a really good night on our Aussie, and we did really well, so I'm really happy with that. And we're talking like micro lots, so £16, a fair decent return on a micro lot, to be fair. So we'll have to keep an eye on the dollar Swiss today. I'll just see how we go, and with any luck we're going to get to TP on a few of these, and then it'll buffer the losses. If things reverse, then hopefully the profits that we make are going to ease those losses. And like I say, we should at least be breaking even because the SL and TP are the same. So we have to at least be getting to break even. So a positive result like we've seen this week is great. Okay, and it just proves that the bubbles are working. Now the thing is, the euro, might be worth just showing you this, is that we probably should need to come back down to the pitchfork, which is what we're doing. Okay, and they're going to be buy the dip opportunities on the resistance line or on the support. And I was saying on the weekend that this might be a better place to buy. I'd be more confident about buying because that'd be a much better entry for a long. It probably bounce on the pitchfork here. If it doesn't and this breaks, then I'm going to be looking for longs here. And we have kind of overdone it a little bit. You can see how we overextended the pitchfork quite a bit, and we should be really within those parameters here, ascending higher, but we shouldn't really exceed the pitchfork so much. And you can see how it works. It's really easy to use. You take the anchor as the swing low, and you just map the prongs of the pitchfork to the swing high and swing low. So that's how it does it. So maybe we'll be okay today, so that'd be great. And let's show you the indices in gold. And so S&P, see, they are buying it just slightly. Can you see that pixels, about 3 or 4 pixels there, they're buying it. So we're going to fall if they buy it. Or so I say conversely, they're not going long, they're going less short. And that's what's happened, is that the bears are very short, but they're giving up on their bearish bets. And if this falls dramatically and we break perhaps this low, then we're going to see a big move, because it might tell us that they're getting out of break even. And so these guys are absolutely getting squished and they want to get out badly, and it's going to be quite a desperate move that they need to happen, but they might not get it. But if they're going to go less short or slash more long, then we'll see some price action materialize from that. So that's S&P. Dow Jones is a completely different beast, basically, because of the fact that they sold it and they're continuing to sell it. It's ever so slightly sideways over the last 3 hours, but that's the buy there, and up we come. So you can see how we're definitely trending higher, so you don't really want to fight that. And we might get the risky sell tomorrow, because it all depends if we get the crossover. I'm not sure we will. We probably imagine that the bears are going to give up. If they do, if they give up en masse, we're going to see a big change on that, and then we'll get the sell. So basically it's waiting for the bears to give up before it falls, and that's what I mean. It's just punishing them, beating them down to submission. Basically it's just really horrible and cruel. DAX is going to be very sideways. Oh, okay, right, let's draw a box. We can probably draw a box. It's a little bit early, but we can definitely look at this box tomorrow. So what's happened is that they create a supply or demand when they buy or sell, and they don't realise that they're doing it. And so by going long or less short, they've created a box. So it's this one here, I think. Yeah, it's this one. So we should be below this tiny candle here. Okay, of course, tiny candle. So we created a very thin supply, so we should be below this. And this could theoretically be a top. I don't know what to call tops or bottoms, but if they're going to get ejected like this, then that could be the top. Like I say, it's just waiting for the bears to give up before it falls. And without the sentiment, you wouldn't have visibility of that. Okay, so it's really important to have some kind of sentiment analysis in your toolkit. And then gold is a bit tricky because we're really choppy last several hours, and just, you know, chip chop, no clear direction at all, just sideways up zigzags. They'd sold it, so you know we can create a box here, and yes, here-ish, there, and so you know, because they sold it, we should be above this box. But we have to remember we've got some weekly supply up here as well, so technically probably a little bit overdone sentimentally where I buy, and they've sold it over time. So it's a bit of a tricky one. Yeah, it's very tricky, but you know where the stop loss clusters are because I just published them in Discord, so keep an eye on those levels. And that's the reaction from the SLC yesterday, and we had quite a nice reaction off that. So it's possible if we do fall, we'll get another reaction off the SLC. Like I say, those levels are in Discord. So fingers crossed that the robot goes good, it goes well, and I think perhaps some of these dollar pairs are probably overdone, a little bit overstretched, and then hopefully we'll get some nice profits today. Like I say, if we do get some nice profits on the dollar Swiss, if things turn around suddenly, which is likely going to happen, at least those profits will buffer those losses. Alright, so let's hopefully we get a nice surge on the dollar, and then we'll have a good week. So I hope you have a good day, and I'll speak to you guys soon. Remember to let me know if you've got any questions as well.